I've got £1.5 million worth of debt. That's not insignificant, and these interest rates are going to have an effect on the amount of money that I make. Hello guys, and welcome to another video. My name's Mark, I'm an entrepreneur and property investor, and in today's video, we're going through some sad news. We're looking at interest rates and how they are killing buy-to-let, and I'll be honest, looking at some of this data, it's quite scary. So stay with me, I'm going to go through all the data with you. I'm going to show you the interest rates I've just been offered on some of my remortgages. Let's work out together how we can get through this as best as possible and still make a profit in what is going to be an incredibly tough environment. So the Bank of England, unless you've been sleeping under a rock, has increased interest rates to 2.25% recently. Now they've got another meeting in November, and Andrew Bailey has said that they're going to increase interest rates even further to really tackle inflation. So I think it's important that we just take a step back and go, what are the Bank of England trying to do by taking money away from you and me? Well, inflation, again, unless you've been sleeping under a rock, has been at record highs. It's 9.9% at the moment. It's looking to go into double digits this month. Now, by raising interest rates, what essentially happens is borrowing money costs more. So if we look at mortgages, for example, and we're going to come onto this data later on, if you're currently borrowing at 3% and that changes to 7.49%, your mortgage payment every month goes from £375 to £936. Now, this means you have less money to spend. And if you have less money to spend, then in theory, you're going to create less demand because you're not going to have as much money to go out and purchase goods with. And that is what essentially has risen prices, you know? When you've got demand that outstrips supply, simple stuff, you know, if you look at demand and supply, there's always this equilibrium, demand, supply, and essentially, if there's an undersupply, that's a terrible drawing, isn't it? Let's get rid of that one. So where you have a spike in demand and supply cannot keep up, prices go up. Equally, if you start to reduce demand and supply stays constant, then prices will start to come down as people compete in order to get more business. So essentially what the Bank of England is saying is the economy is running too hot. There's too much price inflation. We want to cool demand by reducing the amount of money people have in their pockets to go out and spend. Now, that's not going to feel very good for you and me, if I'm honest. But ultimately, they're saying that in the long run, that's preferable to inflation getting out of control and prices spiraling over a long period of time. So that's the background of it. Now, what does that mean in practice? Well, in practice, I secured a 5-year fixed for one of my HMOs, £350,000 worth of debt at 3.29%. I'm feeling pretty good about that today. That is going to run until 2027. So no problems on that one. That's at least 10%, no, about 20% of my debt completely locked into a long period at a long rate. At a low rate. However, we're going for a refinance at the moment on one of our properties, a much smaller amount, and we've just been quoted 7% for the same thing. So what I wanted to do today was go through a little bit about some quotes that I've just run on the internet so I can show you some examples, and we can talk a little bit about how this is going to really hurt buy-to-lets and HMOs, and basically property investing in general. And then we're going to talk a little bit about what you can do about it, or what's to be expected, because when we run through these scenarios, the market reaction isn't going to be nothing. These are big increases. Make no mistake, these are huge increases. So they're going to take an effect and the market is going to move. There is no question. So if we looked at a £200,000 purchase, a £200,000 house, and you had £150,000 worth of debt, at 3%, you're looking at about £375 per month in mortgage interest repayments. And you can see Aldermore was quoting 7.49 on a 5-year. TMW, the mortgage works for anyone who doesn't know, 5.89 on a 2-year. TMW, 5.64. 6.54, sorry, very dyslexic all of a sudden. 6.54 on a 5-year. Now that is a massive difference when it comes to the monthly payments. And Tom, we were speaking a minute ago and you said to me that your house, or that you currently live in, is a 2-bed in Carston. You can check this on Rightmove, guys, if you want to. And it's worth about 200,000, right?
Yeah.
What's your rent?
grand a month.
A grand a month. Now, a landlord, I can tell you right now, at least 10% is voids and maintenance. It's a flat as well, isn't it, or a masonette? So there's a service charge on that, which is probably £100 a month. So you're looking at £100 a month for voids and maintenance, £100 a month for service charge, managing agent fees of about £100 a month. So already, pretty much all of these scenarios, your landlord is going to be losing money. How long do you think they're going to want to do that for?
Probably not very long.
That's the right answer. Not very long. And this is where we start moving, guys, towards the future and what's going to happen, what the reaction to this is going to be. And it's not all going to happen overnight because, as I said, with myself, I've got 13 properties. The mortgages are staggered. I've got a lot that are finishing in 2023, 2024, 2025, and now this one in 2027. So I'm not going to feel the full effects of all of this straight away, and nor is the market. But some people are, and the second that they do, they've got two options. Sell the property, stop being a landlord. Take a loss until mortgage rates come down, increase rents. That's really the only scenarios they have. Now, if we think about it from supply and demand, it's well documented in the moment, but there's a real shortage of rental properties. So if landlords decide that they don't want to be landlords anymore and start selling up, well, what's that going to do? That's going to reduce supply even more. Let's assume that renters still want to rent the same amount of houses. Prices will have to go up. Costs go up, prices go up. All of these things really feed through to what I would consider rent rises and people exiting the market. Now that's an opportunity. Whenever these sort of things happen, it's an opportunity. People are going to be looking at this, making a small loss every month. They're going to want to offload those properties fairly quickly. My personal gut instinct is this cannot go on for too long. The UK is addicted to cheap money. The world is addicted to cheap money. It's been that way for so long, and people have been forecasting it for a long time to come. The cost of building houses really does have a flaw. For example, at the moment, you can't get an extension built for less than about £2,500 per square metre, right? And that used to be about £1,500 to £2,000 if you go back 2 or 3 years. Now, whilst I will accept that if we manage to bring inflation down, wages might come down a little bit, you might be able to get your builder cheaper, but energy prices are remaining high. I mean, as long as we have that, the raw materials that go into creating concrete, bricks, transporting wood across the Atlantic and all these sort of things that happen for construction to operate, that's still going to remain a really high cost, which means building houses has a cost. And that's going to be our flaw. So I don't see house prices crashing. What I do see is some distressed sellers coming to market, maybe they've had the house 10 years, willing to accept 10, 15% under market value in order to get rid of the property within a month or two or something like that, where you can really solve that problem for them on their immediate cash flow. And this is likely to be mum and dad investors, right? People who have got 1 or 2 properties. It's not likely to be your big investors who've got a portfolio where the leverage is, on purpose, to be honest, staggered. So any market shocks can be weathered and not taken all at one go. So for me, I think this is going to lead to opportunity. Am I worried? Yes. I'm worried. I look at these figures, they're scary. There's no question, if I've got £1.5 million worth of debt, and I will do another video about how much debt exactly I have, because I need to write it all down and get a good feeling for it, but it's about £1.5 million worth of debt. There is no way this is not going to affect me. This is a big, big change. I think you should be ready for it. I think personally, I'm going to hold a bit more cash. I'm going to make sure my reserves are nicely stocked up, and I'm going to make sure that other people hurt before I do. And as soon as enough people are hurting, I expect personally for the Bank of England to have no choice but to U-turn and start to reduce rates again. Too many people have been sold on Help to Buy, which really is Help to Sell for the builders, but they've got big debts. The government have backed these by 20%, so they've got equity in the game. They can't afford for the house prices to go down. Everyone's going to negative equity and just walk away. This would be a huge problem. It's much better to just go, you know what, we're going to have to take the hit and prices are going to have to go up. And ultimately, I think that's probably going to be the outcome. But guys, I'm no economist, right? I'm no expert when it comes to these things. I can't see into the future. No one one can. Anybody who tells you they can, liar. There's no way. So ultimately, all we can do is look at the market, make our best guesses. We can use supply and demand, and we can understand that that is the way that capitalism works. So we can use basic theories and surmise from that what's likely to happen, but nobody knows for sure. One thing we do know though, guys, is it'll all be all right in the end. And if it's not, it's probably not the end yet. So for my gut instinct, I'm still going to be buying and holding and making sure that I insulate myself as much as I possibly can, holding some cash reserves during these tough times, and hopefully that will see me through. But let me know in the comments what you're going to be doing, guys. I'm massively interested. As you know, I reply to every single one, and I look forward to seeing you on the next video. Like and subscribe as always, and I'll see you again soon. Cheers, guys.